now.
Okay, good morning, everybody. Good to come right behind Norm Hallett, who always has a lot of stuff to say and a lot of good value to add. So I'm very happy with that. This is the Option Professor of OptionProfessor.com. Quick background, we've been doing this for decades, and we have done webinars and seminars on the uses and risks of options. And we have educated thousands upon thousands of people about the uses and risks of options, using them for cash flow purposes, writing them, as well as buying them for limited risk opportunities, replacement trades. On the website, optionprofessor.com, we have available some PDFs that go over all the different strategies you can use. And today we're going to go over VIX trading, as well as we're going over news, trading the news. And obviously, great example. I've got some great examples on trading the news today on the up and the downside. So you can we'll check those out. But we're going to start out by talking about the VIX. And since I'm an option guy, for decades, I'm certainly no stranger to the VIX. So I have a philosophy, an opinion. That's what I'm going to be sharing with you today. So obviously, that's what I'm sharing is my view, my opinion. The VIX is a very, very good indicator in a lot of different ways. It gives you a little idea of momentum, gives you a little idea of overbought, oversold. It gives you a good idea on complacency or panic. So what we're going to do is we're going to look at the VIX, and then I'm going to compare it to the stocks. Okay. Now we're going back 1 year here, but I think what I'm going to do to encompass the crash of last year is go back 2 years. And so give me a second. Let's go back 2 years, and that'll give you an example of what happens when it goes crazy here. Okay. So the VIX going back 2 years here, you can see my view is the VIX has levels that are very important. When the VIX is between 10 and 15, you'll see the stock market is generally doing quite well. So we're going to see, and we're going to go back and show you the S&P. So can you see right here, we're between 10 and 15 pretty much the entire time in the fourth quarter, going into at the end of 19, going into the beginning of 20. So there's your 10 to 15 area, okay? And then you've got breaks above 20. When you get breaks above 20, as you see in February, March of 20, as you see in, let's just say January through, well, pretty much January through July of last year. And then this year, when you break above 20, okay, and you're trading above 20, sometimes that is when the market is going to be most susceptible. If it ever gets above 30, you've got to count on the possibility of a big down move, okay? So right here, you can see it breaks above 30, okay, good size down move. October of last year, remember we had a nice big drop, boom, above 30. So anything above 30 is dangerous. That's why this recent run went up towards 30. So that looks like it could be a buying opportunity, which today it looks like it is. But again, if we were to break above 30, then that would be the danger. In fact, I would say that if we break above 30 for whatever reason, we're probably going down to test that 200-day moving average at around 4,100 or 4,000 on the S&P. If we don't, and we get back under 20, okay, and start trading between 15 and 20, then I think new highs might make some good sense. So, I would watch the VIX very closely. Everyone's got their party hats on, but really, realistically, what we're getting here is a rebound rally off an oversold condition short term. And why are we getting a rebound rally? Because the news has changed. China was closed until today, and they came out, and at least it doesn't look like a total disaster. And of course, on Monday, everyone was kind of betting on total disaster. Also, when you see the volume on the stock market that big on Monday, every Tom, Dick, and Harry is selling, and the guy on the buy side is just going to drop the bid as far as he can and collect all that stock, which is what he did. And now, obviously, the selling has abated. So boom, you snap back. Again, the Fed is going to be meeting here today at, I think it's 11:30 Pacific time. It'll be 2:30 Eastern time. And my guess is obviously they're going to talk about tapering, but they're not going to talk about any aggressive tapering, and they're not going to talk about any hikes. And they're going to be talking about, withdrawal of emergency accommodation, but not at an aggressive pace. So that could be a good thing as well. The resistance on S&P now is up in the 4,400 to 4,500 neighborhood. So likely it's going to try to possibly get into that unless the Fed came out and started talking a little more aggressive, and unless the Chinese situation goes more sour. But the end of the month and the end of the quarter is here, and that can bring in buying. And then, of course, earnings is dead ahead. And let's hope they're a lot better than FedEx's earnings. But there are some people who are going to front run the earnings thinking they're going to be good. So the bottom line is that there is a little bit of seasonality here that could be helpful to the market. Plus, it's oversold. And the VIX, of course, is overdone here up at the 30 level. Now it's down at 22. If it can't get under 20, though, and we are up in the 4,400 to 4,450 level on S&P, and it starts going back up, I would be starting to think, if you're a trader, you better start thinking about the double dip. But again, that gives you a little idea of the last couple of years. Very dangerous when it gets above 30, okay? Because that's when you get some of your bigger drops. Now let's just take a look at an S&P chart over the last 2 years and see if it kind of corresponds. And let's see with moves above 30, what has happened. So that would be in the obviously the crash. So we know for sure the market tanked there. Then we've got a thing around June of 2020. And then we've got a little September, October, November of 2020. And then we had a little bit in January, February of 21. And then we have had a little bit of one in May, and we just had one now. Okay, we'll put the S&P up and you can compare it. And again, this is an indicator and it's a parameter, right? But again, looking at, obviously the crash, we broke above 20 and then broke above 30. And that's when you don't know what's going on. And that's the kind of drop you can get. Again, we had some other problems here in the July timeframe. And again, we got a little bit of a drop here, June, July, nothing to write home about. Then, of course, we had one going back last year in the October, November timeframe. So you had a couple of nice big drops there while the VIX was rising. But again, once it gets underneath the 20 mark and starts trading anywhere between 15 and 20, you're going to have generally a decent market. You'll have some dips, but nothing dramatic. As you can see here, in May, we had a little bit of a drop when the VIX jumped up. Again, we just had another one right here. So again, if the VIX can hold under 30, again, you can build a nice case that, and I'll bring the chart in a little bit closer now to 1 year. You can make a decent case that that low could hold, okay? But if we see a situation where the VIX is unable to get into the teens very well, and this thing goes up towards where this gap is, which is around 4450, let's say, and it can't break through there, and your VIX is right around that 18 to 20 area and starts going back into the 20s, then a retest of this or even taking out this might be in the cards. So again, a lot of the moving averages, let's just give you that real quick. I'll put up the moving averages here so you can see 4435. So that 4435, 4450 area, that's a neighborhood where this could be a rebound rally that fails. Okay. And 4100 is your 200 day. And that is one that could get tested if this VIX goes down like it is now and then springs back. Again, the earnings are going to be very important. And I would say 90% of the people in the world are thinking the earnings are going to be fantastic. Well, just to give you a little clue on if they aren't, what can happen. That's what can happen. Just to give you an idea, give you a nice short-term chart so you can see the last 10 days here. This is FedEx. You know, you're walking along at 260 in the last couple of weeks. I got a good company, FedEx. I got a good company, FedEx. And the next thing, the news they announce is not very good. And there you go. You got a pretty big good drop down here. Maybe it's a buy down here. I'm not sure. Let's just take a look at the moving averages on FedEx just to give you a little jump off here to a sidebar. Yeah, so the moving averages are inverted and they're all above the market. So that makes for a tough environment. Could you snap back? Sure, just like the S&P snapping back. Again, the majority of people think buy the dip, and they may very well be right. But you have to respect the charts to some degree, and the charts definitely have broken down on the S&P when they broke under 4,500 and then 4,450. And the VIX, while it is down from the 28 area that it hit earlier this week during the panic, it is certainly still elevated in the area of 21. So again, my experience on the VIX, just to use parameters, and I'll just even go back even further. Let's go back 5 years on the VIX. That'll encompass the Trump years. Okay, so as you can see, the stock market was pretty darn strong all the way. Had a couple of scares there. Remember the fourth quarter of 2018? You had a pretty good scare there, and the VIX went up here, and that was a buy. Okay, so again, as long as the VIX is trading between 10 and 20, even 10 and 15 is ideal, but 10 and 20 is still okay for a market to remain positive. Okay. If you break above the 20 number or trading above the 20 number, then of course it can be a little bit more dangerous. But again, right now, this looks a lot like May so far, where you had a spike up and then the market got bullish, got a spike up, and now the market is trying to get bullish. Again, looking forward, if we are going to get this COVID variant to go away and we are going to normalize behavior, and if you look at things like the airlines, the hotels, the rent-a-cars, which are the three that I look at for the reopening, they're looking like they're going pretty good. So again, if you think that the Delta variant will go away and we'll get more normalized into the wintertime, if you think the Q3 earnings are going to be stellar and that the fourth quarter is going to have a very good buying season, then obviously down here, is obviously a good place to start nibbling. Again, if you're a moving average kind of guy, you can't like the way the 1 year chart shows the 12 SMA, and I'll get into that in a minute. But again, as far as the VIX is concerned, the way I would use it is, and if there's a huge spike up here, then you've got to figure the Fed's coming. Okay, because let me see if we can go back for the entire data. Yeah. So when you ever see this, you got to know the Fed's going to be coming. There's the great financial crisis, and there is last March. So if you ever get the VIX up here, you know the Fed's coming, because there's no way that they're not going to come in and do things to firm up asset values. So these are the great buying opportunities for sure. So VIX is another way of giving you an idea if you're looking at a, let's just call it a rare opportunity. Okay, so watch your VIX right now. Again, if this thing starts spiking above 30, again, that would open the door to a much more significant correction. Okay, and again, right now, you can see, and then, if you're looking at a long-term graph here, the VIX lows are getting higher. That's a low, higher low, higher low, and this is a higher low. So I don't know what that means. There are some people who think that we're looking at this year in 2021 very much of a cyclical high point, and that 2022 is going to be very difficult. Now, if that's true, sometime in 2022, we may very well spike above 30. And what would make it have a significant drop where we would spike above 30? Again, that could come from valuations tightening up, meaning they're not as willing to pay as much for a dollar of earnings as they are now. Right now, we're trading 22, 23 on the S&P P ratio. If that went down to, well, normal's 15, but if it went down to something like 18, where some of the analysts think, that could cause the market to have a correction back towards the 3,700 area or something like that. That would cause the VIX to probably jump into the 40s. And that would be maybe a buying opportunity. So one thing good about the VIX is when it does jump up 50, 80, 90, any 50, 50, it can be a great time to load up on high quality stocks that are being discounted. Again, it's a very good indicator to use for either panic selling, of which to buy into because you've got a bet that the Fed's coming, or temporary, see these things only up here for a little bit, temporary disruptions that give you an opportunity to get in. Down here, when the VIX is down here, it's kind of a rough racket to get in because, again, when you're down here at the lower ends of the VIX, you're going to be susceptible to what's going on now, which is a couple 300-point drop in the S&P. Now, when you get a couple 300-point drop in the S&P, if you're an accumulator, you're getting a good buying opportunity. Okay. But again, you've got to hope that we're not looking at a cyclical high at 4,600, which we just hit, ballpark figure, 4,550, whatever. And you got to hope that this is not a changing tide as the ECB is taking away accommodation and the Fed may be taking away accommodation. And the GDP growth, which was obviously fantastic coming out of a lockdown, is going to moderate significantly. And inflation is going to take a bite out of the consumer. So there are some things out there that, are changing a bit. Now, even some of the best analysts are saying the easy money has been made. So, that, again, I'd be watching the VIX very closely. If it gets comfortable above 20, then I would be still having and we're still under 44.50. I would still have, my warning lights out as far as that's concerned. Let's take a look here on a short-term basis, 1 month. Again, you can see a nice spike up. And again, all it did right now is fill the gap. Okay, so that's why we're not out of the woods yet. We're not above 44.50, and we are not underneath this level here. Getting back under 20, I think, is really essential if you want to put your total bull cap on again. Again, when and if the VIX can get under 20 and 18, then I think you can breathe a sigh of relief that this is probably the high on the VIX for a while, and you're going to get a Q4 rally, which a lot of people are calling for. A lot of people are saying year end, we're going to be at 4,800 on the S&P. Well, I mean, the 4,300 is looking pretty good if that's the case. I don't see us going to those numbers unless you can get this VIX under 18. And of course, unless you can get above 44.50 and above 4,500. So obviously buying into the falling knife on Monday was a great idea, but it's an aggressive play. And it could be a very outstanding thing to do. But maybe somebody who wants to be in there with a little bit of a tailwind more and a little bit of an idea that the lows might be in, might wait and see if we can get above 44.50 on the S&P and if we can get underneath this 20 to 18 area on the VIX. Because as we were running up, let's just look, as we were running up, do you notice the VIX is well under 20 here? Well under 20. And it seems to be having a very difficult time getting or you're staying anywhere near 16. So high points seem to be around 16, 15. That's when the S&P seems to be at a high point. And then, of course, corrections will get you up towards the 30. And I would still say the bears are controlling it until we get underneath 18. Now, this should not be your only indicator, but it's certainly an indicator that I would watch and I give a lot of credence to. Because as you can see, once we got above 18, there was your warning that we were going to crack. Once we got above 20, right? That's what I've been saying. Once you got above 20, put your hedges on, put your replacement trades on, put your collars on, put something on, or else you're going to get caught into a little bit of an abyss. And a lot of the companies in the value sector are the ones getting hit quite a bit, meaning value and dividend paying. One of the reasons there is the interest rate picture is not really getting that favorable, not really showing an aggressive move to the upside. The 10-year note is meandering between, well, it hit 112, which is very low, but it's still having a hard time getting above 140, 145. And if it got above 140, 145 and started to press 150, 160, or even the Q1 highs of 175 on the 10-year, then believe me, I would think that the value trade of banks and industrials and cyclicals, et cetera, would roar. So anyway, that pretty much covers what I'm thinking about on the VIX. And you can see how I'm reading it right now. I'm reading this as something that filled in the gap. And we will have to see as we go into the end of this week and the end of the quarter. Are we going to get the window dressing, which means fund managers and ETF guys start buying some stocks to make their portfolio look better than it was? We're going to get that. Are we going to get some quarter-ending buying power coming in? Then this thing obviously will go back down towards the 2018. If the earnings after the first of the month come in and do anything that even looks like FedEx, then you're going to have a situation where it's not going to be able to hold this 18-20 area. And that might be a situation where it'll send it back up. But if this thing can get underneath the 18 area and even under 20, stay under 20, 20 to 16, then that could mean the fourth quarter might be darn good. So keep an eye on things like that. And let me see what I can do as far as looking at some other charts. Okay, I got my other graphs up here, so I'm going to go over some things right now. We want to talk about trading the news. Okay, let's start talking about trading the news. What I like to do is you can use a one-day graph here. Now I'm going to reduce this one because I think it's too big for you. So I'm going to reduce it so you can see it better. That should be better. Okay. When you're looking at a turning point, let's face it, on Monday, the news was all about China and this Evergrande and the whole world's coming to an end, right? And so everybody's dumping everything. And the VIX is up at 30. You got to start looking at the buy side. You got to start looking at a turn. Why? Because again, it's $300 billion, these guys. What's $300 billion in this world? It's peanuts. Now, of course, it could bleed over to a lot of other things, but now you're extrapolating. Also, coincidentally or not, China was closed. So you didn't even know what they were going to do. So that unknown, plus this, it's another Lehman story, which is a joke. Lehman comes around once a century, right? So here's the deal. You're down there and you're what, we're 45, 50, we're 200 points underneath the highs, right? So if you are looking at a turn, what you do is you look at the one-day chart. Well, excuse me, you look at the 5-day chart and you look for some kind of a turn, right? So that first of all gave you a turn right here in the 43.30 area, and the RSI got back above 50. So you take your shot when it gets at least you have to get it above the red line. Okay, then you got a sell signal up here at 43.80 where we just came back to. Okay, then you got another buy signal down here at 43.40, and you're riding it. And now the averages are all inverted, and it looks pretty good. And the RSI is above 50. Also, you look at the monthly. Okay, on the monthly, again, the good news is the green and the red, the 12 and the 24 SMA are crossing right there at 43.58. So if I'm in there right now, I definitely don't want it under 43.58. I don't really like the blue, the 36 SMA coming straight down. I don't like that at all. And of course, you've got that high point there as well. But again, you see where we broke down from? This is where I believe there could be problems even on a rebound rally. Remember I said 44.50, something like that? Ballpark right in here. This is around the 200-day moving average. And there's 44.50 is really where the break came from. The low today is, look at that. The low on that day was 44.48. Once it broke that, it was sayonara. So since that was a breaking point and it's close to the 50-day moving average, if we come up to that neighborhood and the VIX is in the 18-20 range, but not much lower, and the thing turns back down again, then I would be more concerned that this is going to do a retest or something on the downside. But right now, again, you got your turning point here. And basically, you got your buy signal right around here in the 43.50 area, 43.60. So that's the number you want to stay above right now if you're bullish. This RSI is above 50 on the monthly, but it is also not much above it, 57. So if it starts failing here and the RSI here gets back under 50, you got to figure that it might go back into the soup. Because again, the VIX is still well above 20. So volatility is still indicating nervousness. When the market, again, is in that 10 to 20 area, 15 to 20 area, that's more of a complacent and more of a situation where you will be, you'll be seeing things like that. There are earnings coming out. So when you want to trade news, so anyway, trading the news this week was pretty obvious. You got to figure that A, the Fed is not going to be hawkish, and B, you got to figure China's going to do something. Come on, it's a $14 trillion economy. They've got their second biggest builder of homes not making their payments, and they've got riots in the street practically on people who bought houses who think they're never going to get them. What are they going to do? Nothing? Of course they're going to do something, right? And again, do you think the market was counting on them doing something on Monday and Tuesday? No. So obviously here we are. Now, the second thing is the Fed's coming up this afternoon. There is no way they're going to be hawkish. There is just no way, in my opinion. This is my opinion, my view. Why? Because the unemployment picture still looks lousy. The participation level stinks at 60 something. And there's still 5.4. There's still many, many people displaced out of work. Okay. Plus the inflation that everyone was worried about, come on. Lumber already went in the tank. Copper has gone in the tank a little bit. You've got the industrial metals showing that they've gone in the tank a little bit. You've got a lot of people are saying China is going to go into recession over this thing. If that's the case, I mean, that's a big demand going to be going away. So again, there's a lot of things out there on the inflation front that look like they're going to come down. Housing prices, they went way up. What are they going to go up another 20%? I doubt it, right? So you've had a big bang in housing. That's probably going to slow. You've had a big bang in the industrial metals and commodities. They've already abated. So it's a situation where the inflationary numbers are probably going to contract. Used car sales, come on. We've been around a long time. How many times does used car sales prices go up 25%? If anything, they go down 25%. So the bottom line is that there are some winds of change because of bottlenecks that are going to go away. And therefore, the inflationary pressures have a very good chance of abating. So again, there is just there's no scenario I can see where they get very, very hawkish. And they realize, again, they're not stupid. The world's at 1.5, 1.3 on the 10-year. Do you really think the world can take 2.5 or 3% on the 10-year with all that debt out there? Do you realize how many people will be losing money on bonds if they did that? There's still 12 trillion and counting on negative yielding debt. Okay. Yes, it's down from 18 trillion, but still 12 trillion is a lot of negative yielding debt. Now you've also got how much in the corporate bond sector. So there's no way that the Fed is going to be getting aggressive, or else the entire debt bubble would burst, right? Because everyone who owns any debt would be losing their butt, because that's what happens when rates go up. Your bonds go down in price. And if everybody who bought all this debt starts losing money on all this debt and they decide to get out all at one time, anybody who knows about the bond market, it's a dealer market where people are just talking between each other, trying to get buyers and sellers going. Well, you see during the crash that there are no bids on a lot of things because these dealers put their wallet away. And if they put their wallet away, the only one behind it is the Fed. So again, looking for high interest rates or something like that, I mean, I think 2 and 2.5% is a pipe dream until we take out 175. So a low interest rate environment right now, from what we see on the tea leaves that we're looking at, is in the cards. Okay. So that's going to be the story. Could we go up to 150, 160 or something like that? Sure. Do I think we're taking out 175? I don't. If we do, I'll change my tune. And then I'll open the door to that 2 and 2.5 talk. And then, to be honest with you, it could cause a very big ripple effect in the bond market. Because again, these corporations have issued zillions of dollars of bonds. Municipalities are issuing them. You've got the government, obviously deficit spending like never before. Boom, they're issuing it. So you got everybody issuing debt. And that's one of the problems with the China situation is, there's a lot of emerging market debt. And that could be vulnerable, which is why China is trying to stabilize the situation. So again, the Fed really has no choice in our view, except to maybe take away some accommodation over a long period of time, and also hiking is way out in the future. Maybe going from 0 or 0.25 Fed funds to 0.5, but nothing else. Okay. So anyway, let's talk about trading the news again. And again, if you're trading the news on the bond market, you don't want to be looking for any big spikes in interest rates. Let's talk about FedEx. Classic case of trading the news. Did FedEx give us any indication on the charts that it could be down $20 today? Well, let's look at the 5-day graph. Okay. The 5-day graph pretty much gave you the sell signal up here at 258. Okay. So if you're a short-term trader, you should have been on the sell side of this thing. And going into earnings, you should say, FedEx has got a lot of expenses. FedEx has got a lot of margin pressure, and FedEx is probably going to be guiding a little bit differently. So let's take our shot at the sell side. The market is deteriorating. Never got, going at all. Peaked up here a little bit just to probably run some stops, get some people out. And then what did they do? They tanked it. Let's look at the 1 month. That might even be smoother. Yeah, that's smoother. Okay. And this is a 1 month chart. Okay. And this is a 12, a 24, and a 36 SMA. So this thing is kind of meandering up here. So you're holding on, but it gave you a nice little sell signal right there. And what was the price? Price was 265 to 267. Okay. And then you just say, listen, I'm going to just sit with the sell side of this thing until the blue line gets penetrated. It got tested, right? But didn't penetrate. And I'm just sitting there going into earnings. I'm going into earnings. And boy, was I right. That's a classic example of trading the news. So what you do is you might find out when the earnings are coming up, and then you might look at some of your charts and see if there's any deterioration. Again, look what the RSI. RSI is under 50 the whole time. Okay, when you're under 50 on the RSI, you're in negative territory. Okay, so it's pretty much under 50 the whole time. And of course, now it's way under 50. In fact, now it's a very oversold. You're at 18. Okay, so, and that's a very big gap. So let's just look at the 1-day chart and see if it looks like there could be a turn going on. Not too much. Yeah. So the bottom line is that, yes, the best thing you can say here is that the RSI is way down at 17. Now let's look at a long-term graph and see if there's anything it's bouncing off of. Going after a 5-year. That doesn't look very good. Now, again, it's oversold. So could it bounce? Sure. But again, the longer it stays underneath these averages, they are going to invert and go back to the downside. Let's look at a 20-year graph. See, when you look at the different time frames, at least you get a different viewpoint. Okay, now, where would FedEx possibly be a place to buy? Well, if you want to buy it against 200, that would be a way. If you want to buy it against 215, that would be another way. And so these are the longer term averages. And again, there's still a nice uptrend here. So it did violate it once here, but other than that, it was pretty much up and away from 2000, 13 all the way up to here, violated only once. Moving average never dropped though. See, here's the deal. I could show you this on the S&P. This is on a long-term chart. If they violate a moving average like this, but the average is still rising, you might just give it time, because within 2 months, it was back above the average and off to the races again. I'm going to show you an example on S&P, because this is what made us bullish when everyone, thought the world was coming to an end. Let's see here. Because there, when you get opportunities like you did last March, you want to take advantage of them. Okay, here's another classic example. You see this, the stock market's been in an uptrend, obviously, since when it broke the average here, 2010. So again, outside of a break here and break here and break there, there's never been a break of the 36 SMA on the 20-year graph. And look, when it breaks, how long does it break for? So again, is the moving average ever pointing down? No. So even if it breaks, you say, I'm not going to sell until this average starts pointing down or at least flattening out. And ergo, it back up right away. Tested, but never broke. Now it broke here for 1 month, but by the next month, it's already gone again. It broke here during the crash of 2020 for 1 month. By the second month, it's up again. So again, I like to use these moving averages as a little bit of a guide of the trend. Now, here's the dangerous thing that I've been talking about and we've been showing to people. This is extremely extended, okay? And it has not been a problem. It hasn't been a problem here at 3,600, hadn't been a problem at 4,000. It hadn't been a problem at 4,600. But the higher it goes, it doesn't make it less overbought, right? I mean, yes, it's overbought here. Yes, it's overbought here. Yes, it's overbought here. The higher it goes, it doesn't make it less overbought. And when you're this overbought, if there is any type of a shock in 2022, you can see there's a lot of real estate that could come in. So that's why there are some cyclical people out there who think that 2021 is a cyclical high and that 2022 is going to have a very sharp correction. And I think there's not a whole lot of people who step up to the podium and say that. But now that I'm just looking at the numbers and don't have any axe to grind, then I can say what I see. And what I see here is a very extended market, an extremely high enthusiasm out there. A lot of people who've come in the market in the last year. And, with this type of formation, I mean, we're going back 20 years here. You see anything that even looks like it? And these guys are talking about removing accommodation. Okay. And so is the ECB. So again, this is why they have to be gradual with tapering. Because could you see if they were aggressive with tapering, the type of down move you could get? And the Fed's not stupid. They have charts too. In fact, these Fed guys are trading against the information. Unbelievable, right? So there you go. That's what it looks like as far as a long term on the S&P. So let's go to I'm going to give you some current stuff on what's coming up now on earnings. On the 27th, which is next Monday, Micron Technology on the 28th. Let's just see what Micron looks like. They're coming out with earnings. Micron Technology, MU. See if there's anything that could indicate what that might be doing going into that. Okay, looking at the 1 month. Okay, the 1 month, it's starting to turn a little bit more positive. Okay, and where's your RSI? RSI is above 50. So if this thing is trading above 72, 73, and it starts trading up here, and they come out with a decent earnings report, then this thing has the potential of doing some popping, because going into the report, it's getting people to buy. Sometimes you might guess as a conspiracy theorist that some people may already have all this information, a little bit of an idea of what's coming out. And so what they call get in front of it by buying before the report comes out. This is obviously looking what is happening right now on Micron Technology. So that would be getting in front of the news. Now, again, if this thing by Friday starts getting into the 72, 71 area, maybe somebody also has the news that way. But I'd watch this. The stronger it gets, if you think that, if you want to take a bet that Micron will come out with good news, that's one way of going. Another one coming out is next week would be Bristol Meyer Squibb. And Bristol Myers Squibb on a 1 month has been under a lot of pressure, still under pressure. So again, people do like pharma and they think they're doing pretty good. So I don't know exactly what this isn't showing that anybody is really thinking it's going to be going. So let's look at it a 5-day basis. Yeah. So if this thing started trading above 61, and they're coming out with earnings, there could be people who are getting in front of the stock before the earnings report. So again, get it a little bit stronger and get these averages moving a little bit more to the upside. And maybe you could have a situation where the earnings might be a surprise to the upside. Otherwise, it looks like nobody wants to really be involved too heavily. There was some unusual option activity and that's another thing to obviously use as news is unusual option activity. So let me give you that on Freeport-McMoran. Somebody's buying the heck out of December 33 and 40 call spreads. Let's see why they would be doing that. So, okay, so on a 5-day graph, it's starting to move. Yesterday, they were on TV talking about some guy buying all kinds of call options in the, I think it was December 33.40 spread. I think that was the spread. So obviously they're making a bet it's going up towards the 40 number, certainly above 33. And right now you're starting to get some action there. Okay. And again, if the news in China were to improve and it looks like, don't forget, if all the builders over there are going to have to discount their properties and maybe freeze building because the supplies are so high, and because of Evergrande is discounting all their apartments, then if there's a bleed effect, then, let's put it this way. If KB Homes was discounting all their stuff, it might have an effect on Lennar or Pulte, right? That's the concept. So if that's the case, that's one of the problems this thing got hit for, because it doesn't look like any construction is going to be going on if they're discounting all their properties. But that news can change. And obviously today it did change a bit. That's why we're not at 30 anymore. We're at 32. Now, again, somebody put a big bet on the 33s and 40s. So we're getting some evidence that it is turning. So right now, if you wanted to play that game, it looks like staying above 30 would be the key, and 31 even. What does the monthly look like? Yeah, the monthly doesn't look so great. But again, yeah, I'd like to see the RSI above 50. And I certainly would like this red line, the 12 SMA, to start pointing up. Because if you're going to 40 or 38, this thing is going to have to start pointing up. Actually, the first strike price they're talking about, 33 and 34, would be very important for the market to get above if you wanted. And there's a gap up here that it might go after. But again, your first ones that'll turn, obviously, would be your 5-day, and it has turned. So that's your first evidence that there could be a turn. And you have a point to defend against, which is number 30. So that's your first indication. Then you go to the longer term stuff and you go to your monthly and you see that things look still dodgy, and all it's really done is fill the gap a little bit, going to 32. So if it can't get above 32.50 and it rolls back down, you'll get another chance down here if it fills the gap here. But if you think the guy who bought all those calls has his compass right, and 33.70 is the spread they were talking about, then obviously you want to start looking for more evidence that this thing has the possibility of going up to those numbers by the end of the year. Again, Q4 could be very, very good. Again, if we get above 44.35, 44.50 on the S&P, if you get your RSI back above 50, if you get that VIX underneath 18, Q4 is probably going to be darn good. If Q4 is darn good and everybody's talking about building and infrastructure, here's the other key: infrastructure. They're talking about $3.5 trillion. If it gets cut back to 900 billion, that's a disappointment for Freeport-McMoRan. But again, that was a very sizable bet that we heard about in Freeport, so that's why I'm bringing it up. Is there any evidence of it's turning? There's small evidence that it's turning. And again, if you are aggressive, you're defending 30, and you're thinking that this is the beginning of something. All right, so there's your, that's trading in the news called unusual option activity, which obviously sometimes, does occur. Let's look at Nike, because I believe that has some announcing to be done. Let's see if Nike's got anything going. Okay, Nike is, coming right back to sea level of 50. And again, your downtrend is pretty obvious. So it's got its first, well, let's look at the 5-day. Okay, so you got a little bit of a buy signal right here, 154. And you saw it tested. So right now you want to keep it on a short leash. You keep it on a 156 short leash. And then you're looking to get a pop if earnings are good. And that's basically my opinion, my observation on Nike right now, going into the report. Let's just see. Lennar Homes, that came out, and it didn't have the greatest news, so it dipped initially. But let's see if it's recovered. It looks like it might have. Yeah. So again, this is another way of playing the news. Okay, this thing came out with some earnings report, and of course they're having trouble with bottlenecks. So they're saying they're going to have some problems with this, that, and the other. But bottlenecks end at some point. And these millennials are out there and they're inheriting a whole bunch of money. Somebody says they inherit $2 trillion a year, and they're going to inherit that $2 trillion going for the next 15 years as the baby boomers pass their estates over to the next generation. So they're going to have a lot of money. And again, a lot of them, some of them don't have homes. They've been renting. And of course, a lot of them are now homeowners. But, maybe they went into an entry-level home and they're going to want to switch to a larger home. And again, maybe they're still going to be the people that don't want to live in the city. So there's still a lot of demographics that could be very helpful here. So after the bad news came out and you went from 101 all the way down to 95 here, you got your buy signal to get back in at 97. And right now, holding above 98.50, 98 would be an excellent thing. On the 1 month situation, I'm sure it still looks, it looks like it's trying to turn. So again, this is a classic case of bad news. And then the news is, again, the stuff that they're talking about that was bad news, people are now thinking it's temporary. And they're thinking about after bottlenecks are resolved, and what is the fundamentals here as far as what? Future demand for homes. And ergo, you're looking at a situation where if this thing starts breaking back above 100, your RSI is going to break above 50 substantially. It's getting above 50 right now. So a move above 100 would get all these averages back under the price, and it would open the door for all these numbers up here. So, and it might even be forming a head and shoulder bottom. There's your shoulder, there's your head. Maybe it comes up to here, comes back down a little bit, and maybe sometime in Q4, we break the neckline of 102, and then we fill in up here. Again, this is a area where the demographics of the demand for homes looking forward is still going to be pretty good, many people think. Another one that some value people love is Taylor Morrison. And I'll show you that and see if there's anything going on there. Yeah, this one looks even better. And then these guys, I think, have a lot of value homes. So I know here in Nevada, they've got a lot of projects going. So, here you go. And this is one that I would keep an eye on as well. It actually looks better than Lennar as far as what it's doing right now. And again, some of the value people, I've read Bill Miller, who is a value investor. He had a position in this. I don't know if they still do or not, but this was something that he thought had value looking forward. And again, let's look at a 20-year graph to get an idea. Okay, this one doesn't really go back that far. Let's go back 5. And so again, you get above this neighborhood of 29 or so. You could be looking at a 1, 2, 3, 1 up, 2 down. And then if you take out 29, it could start going up to this neighborhood as well. So again, that's a little bit of indication where the news got bad because of bottlenecks. And now the news might be changing as bottlenecks are expected to change. Just wanted to give you a little bit of Russell information, because if Q4 is going to be good, some people think that the Russell could be a place to go. So I'm going to look at the Russell growth. Still in a little bit of trouble here, but if it gets above 74, let's say, starts trading above 74, it could open the door for some good action there. And let's look at the Russell 2000. Which IWM is a proxy for. This thing can get back above 222 and then 225. That could open the door for a big run in the Russell. There are some people who really think the Russell is going to be it. So there you go. Right at 49. So it's crunch time. It's crunch time. If we can get through this 222 and when all the moving averages do converge, sometimes you get a pretty good activity. And here, they converged, it went up, it went down. This thing has been in a trading range of 215 ballpark and 230 ballpark, right? So again, this is a very long, either accumulation or distribution phase. If it's distribution and we start breaking 215 or 210, this thing's going to go in the tank. If this is accumulation and we start going above 225, 230, then this thing has a lot of potential on the upside in Q4. So this is something to keep an eye on for sure. I'll give you another one that's something to keep an eye on, and that is oil. And the oil market is getting going again. You see how they dipped underneath and now it's above? And where's your RSI? Pointing straight up. So if this thing takes out 50 and oil, some people are thinking in Q4 going to 80, this thing is going to have a very good Q4. So keep an eye on it. It definitely stopped everybody out, and it definitely got everybody negative again. But all it really did was fill that gap. And now it filled this gap. So now it's crunch time. Realistically, you want to start seeing prints above 50. You start seeing prints above 50, then I think you got a lot of evidence that this thing is going to go. Let's look at XOP, which is your exploration and your exploration and your producers. Now this thing never even cracked, so this thing looks great. Okay, and you get above 90 here, and there you go. Look at the RSI pointing straight up at 50. So again, we've been touting this as a place to focus, and prices are starting to give us some evidence. I think the oil's trading 72 almost. So this thing goes to 80 on oil. This thing could play a mean game of catch up. A lot of real estate to fill in if it can get above 100. 90. Yeah, get above 90. So that's a place to look at. And then I'm going to show you some reopenings that, to me, look great. Anybody who travels, they like Expedia. I mean, I like to get my cars. I like to get my hotel. I like to get everything with these guys. And this thing looks like it's going someplace. And again, there you go. So, you should definitely be looking there for some good up move. Reopening, right? Reopening, they've reopened going to Europe. That's got to be good for travel. So you got these guys looking good, Expedia. You got the hotels starting to pick up steam. Check out the Marriott. There you go. Where's your RSI? Looking good. So you got your hotel, you got your You got your how to make your plans with Expedia. Now you're going to need a rent-a-car. So why don't we go look at getting a rent-a-car here with Avis and Budget. And Avis and Budget are looking great. And so there's another thing to be taking a look at there. And after you get there and you got your rent-a-car, you got your hotel, you got your plan. What's the next? Oh, you got to get there, huh? Let's look at some airlines. And I think this looks pretty darn good, which is American Airlines. And if it gets above 21, it's going to look really good. And your RSI is starting to point up. So there's your airline there. You want to go locally here. These guys have really good rates. I used them recently and I didn't pay hardly anything. These guys don't. Oh, I gave me the wrong one here. Come on. Love is Southwest Air. That's got to look better than that. It looks a lot better than that. See, there you go. So it's starting to make its little move here and your RSI is pointing up. So you want to go to a local carrier, you go Southwest. You want to go international more, you got the American, and you also got JetBlue's looking pretty good. Starting to go, not as much as the others, starting to go. I think overseas, Delta does a pretty good job at that. So let's see if that's going to help Delta. They took away my moving averages. Well, clearly it looks like if it gets above 42, it looks like it's getting going. So keep an eye on Delta as well. Okay, and there's JetBlue. And before we close up here, I'm just going to put up the S&P again, see what it looks like for today. Give you one last thing to go home with. All right, here you go. Okay, so it's still up strong. And again, on a 5-day basis here, looking very strong. 1-month basis, looking very strong. And again, so you see the real estate between here and here. That's easier real estate, right? Easier to get through because it's, you know, so far overdone. Everyone's short. Everyone's on TV saying buy the dip. Everybody's saying 4,700 by the end of the year. So this bounce here is going to be, you know, easier. Again, we're going to get into the tougher zone between the 44.50 and 44.35 zone. Let's see how the market does into that zone, because you don't want to buy the rebound rally if that's all it's going to be. And before we leave, let's just see what the VIX is doing. And the VIX is still at 21. Okay, so the VIX just came down and filled the gap. The market's having a rebound rally, still hasn't even gotten into the major resistance. So we'll have to see what happens. All right. I'm optionprofessor.com, where you can get information from us. You can send us an email, optionprofessor@gmail.com. Say, hey, guys, I have questions I'd like to ask you. And you can ask the questions through optionprofessor@gmail.com. Also, go to the website, optionprofessor.com. Get on our list. Every week, we send you a market update. Every week, you'll get updated on exactly what I'm seeing, exactly what my opinion is. We've been doing this for decades. I hope you see that I know a little bit about the markets, and basically I'm not tied to bullish or bearish. We're trying to do the right thing. So again, optionprofessor.com. You go there, put your email in, and we'll keep you updated.